Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar, a fourth bearish black crow. Following on from the recent key reversal down, the market continued to extend its move below the purple lower time, currently 112.07, of the late June to very early August bullish Andrews pitchfork, as well as below the important cap of the dark blue neckline, currently 111.46, of the January to February 2021 reverse head and shoulders neckline, and for a second time further below the bright green lower time, currently at 111.19, of the newer start of August to mid-September bullish shift pitchfork. We also ended up closing below the old broken upper bear channel line, currently at 110.58, dating from late August to mid-September, though I think this is of limited, if any, support or resistance. As a result of these moves, I will be retiring the purple bullish Andrews pitchfork and putting on notice the bright green bullish shift pitchfork to also be subject to retirement. As I previously said in my videos, prices seem no longer that reluctant to venture down towards the bright red slowly declining head and shoulders neckline extension below of the July 2017 to November 2018 move, currently at 109.84. What we have in the immediate way is the green short medium moving average, currently at 110.30, though I'm not too sure how good a support this may be. So if the move lower continues to be the case, then we might form a double top here from mid-August to date. It will all depend on what prices do should they get finally down to that bright red neckline, as that can be regarded as a proxy for the neckline for the double top. Oh, and by the way, it would be an Eve and Eve type double top. Now, so far today, a further approach and test of the green short medium moving average. Cable, AK sterling against the US dollar. A second bearish black crow yesterday, following on from the previous session's bearish engulfing pattern. It was also a second consecutive close below the dark blue middle time, currently 133.88, of the late June to early August bullish Andrews pitchfork. But more importantly, it was a second consecutive close below the bright red lower time, currently 134.05, the more recent and quite acute early August to early September bullish Andrews pitchfork. I will finesse this pattern next time into a shallower bullish shift pitchfork or retire it completely for the same move. Overall prices were capped by some March 2022 congestion at 132.98, and they once again pierced the August 2024 high at 132.65, all the way down for a second time to the interesting 61.8% Fibonacci line of the June 2016 to September 22 move at 132.46, where the decline was stopped once again. Interestingly, the market closed right on the August 2024 high. Below this, well, we have little in the way until the combination of the July 23 high at 131.44, the December 2020 low at 131.33, and perhaps more importantly, or most importantly, the rising dark blue lower time, currently 131.08, of the same later June to early August bullish Andrews pitchfork. Now, so far today, the market has once again headed lower, down through the interesting 61.8% Fibonacci line of the June 2016 to September 22 move at 132.46, and through a fairly free zone and on approach to the June 2023 high and December 2020 low. Euro sterling. A possible bearish double yesterday, verging, though not quite making it, as an indecisive spinning top. This after the previous session's indecisive spinning top itself. However, this is all in the shadow of the narrow, previously broken, though still influential, recent August-based descending wedge pattern, currently 83.06 to 83.38. And even now, and I repeat it again, despite it being broken, it is still influential. Aside of this, we have overhead congestion from the August 2022 low at 83.38, and then really not much until the combination of the July 2024 low at 83.81 and further congestion at 83.86, which was in turn the congestion actually responsible for past July's low at 83.81. Further down, we have congestion from the February 2020 low at 82.79, the whole of 2020 low at 82.74, and then the interesting July 2016 low at 82.47. This is interesting as this is right now the home of target X 82.50, the target for the August to date bearish halfway hesitation. Now, so far today, a strong reactionary move back upwards, up and out of the broken descending wedge pattern and moving through a fairly free area up to test the July 2024 low, and especially the congestion at 83.86. Now, beyond this, the next resistance is at 84.05, and there's a band there that stretches all the way up to about the 84.50 area. US dollar against the Japanese yen. An impressive bullish closing long white Mariposa yesterday. You effectively countered last Friday's very large combined key reversal down and bearish engulfing pattern. The base of what has been a multi-day move higher came from the combination of the bright red broken and now repaired lower time, currently at 141.96, of the shallow December 2023 to early August 2024 bullish shift pitchfork, as well as the August 2024 low at 141.66. The move up yesterday pushed up and closed over the 50% Fibonacci line of the January 23 to July 24 move at 144.58, which had previously capped the market, as well as the upper time, currently 145.51, of the newly drawn and also soon to be retired mid-August to late September bearish Andrews pitchfork. And finally, prices closed over the bright green declining short medium moving average, currently 146.09, stopping and closing just short of the lesser Fibonacci line at 146.69. All this very recent activity has set up the conditions for this week already to be a possible weekly key reversal. So if we close on Friday night either over 143.91 or under 142.19, then we'd be on. Anything in between and we would have a lesser outside pattern. Right now we're looking at a weekly key reversal up. Now further up we have congestion at 148.11, 148.68, the mid-August high at 149.39, and the 50% Fibonacci line, the July 23 to July 24 move at 149.61. Now there is one new feature I would like to discuss, and that is a possible lopsided mid-August to date reverse head and shoulders pattern. I do not like the look of this pattern. It looks very shabby to me, but I cannot deny the possibility that it might exist, and yesterday's close was just over the neckline, which is currently at 146.35. Now so far today, the market is seemingly utilizing the base of the new reverse head and shoulders neckline as a base for an attempt higher. I still feel it is too early, but I am minded next time, if this continues, to possibly lay out some potential targets topside for such a reverse head and shoulders pattern. US dollar against the CNH, the offshore Chinese yuan. A hanging man pattern yesterday, as well as a fourth bullish white soldier, and a continuing follow-on higher from the recent combined inverted hammer pattern and bullish piercing line pattern. Prices reached up and tested for a second consecutive session the first decent piece of resistance we have overhead, the 50% Fibonacci line of the October 22 to January 2023 move at 703.61, closing right on it. Additionally, nearby we have the dark blue upper bear channel line, currently at 703.39, of the broken but still influential August to date bear channel. That's currently 696.25 to 703.39. The next resistance beyond this is the June 2023 low. Now, so far today, a straight move higher over the 50% Fibonacci line at 703.61 and the dark blue upper bear channel line, utilizing as a base for an attempt higher. However, the move up has been limited as prices have not really approached the June 2023 low resistance overhead. That's at 706.57. US dollar against the Mexican peso. A third bearish black crow yesterday, and a significant one, as prices punched down and closed below the dark blue lower time, currently 1966.41, of the recent mid-August to mid-September bullish Andrews pitchfork. As I said yesterday, this is a nascent pattern. I'm quite happy to finesse this to a shallower bullish shift pitchfork, or even retire it completely by tomorrow if market actions demand. Well, I will finesse it this time for possibly to a shallow bearish shift pitch, but I'm really not happy about the way it's moving at the moment, so we'll see. We also saw prices close down below the 2021 low at 1953.63 and the support at 1940.68, indeed just below this last one. Further down we have the big picture item I've spoken about here before, the bright red lower time, currently at 1926.16 of the April to July bullish shift picture, which is still enmeshed with the rising short medium moving average, currently at 1924.06. Just below this is the 50% Fibonacci line on November 2020 to April 24 move at 1920.38 and the March 2020 low at 1915.03. Meanwhile, overhead we have congestion between 1987.75 to 1991.31, containing the December 2022 high at 1991.31 and on a closing basis resistance at 1979.14 and the April 2022 low at 1971.68. Now, so far today, a reactionary move back up, though it has been limited, with prices managing to move up over the congestion only at 1940.68, which wasn't that hard to do. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.